the strategy is not going to be 100%. There is going to be losing trades. There's going to be winning trades. The core thing for this strategy is going to be... Alright, so if you like all my videos, please go leave a like and subscribe. It will really help out the channel a lot. And then let's get straight into this video. Okay, so in today's video, it's going to be a strategy that's going to follow market structure, and it needs to be in a trending market. So you need to wait for the higher time frame to go into the trending market, a nice trend change. In this example, we are going to look at crash 500 on the 15-minute, and I'm going to show you an easy way, a good mechanical way on how to trade boom and crash. There is going to be losing trades, there is going to be winning trades, but you're just going to follow the simple market structure. So as you can see on crash 500 in the 15-minute, there is a nice big downtrend here, and here we go again to the uptrend. Here it's reversed with the current price. So let me show you what you can do when the market is trending. So if you don't understand what a market structure shift is, please go look at my other videos explaining it as well. You will see most of my strategies, I use the market structure shift as confirmation. So let's get into it. So as you can see, price here, we had a high, low, high, low, high, and then this low was broken right over here with this big impulse move. So to confirm a trend, we need two lows that's been taken out. So in this example, it's going to be this low here. As you can see, it got taken out with this big impulse move, price retraced, and then we have our second low that's been broken. So that's, for me, is going to be a confirmation of a trend change for this one and this one. So what we do now, we are going to look, where was the last high that was created that broke this low, a fractal high. As you can see, it was this high right over there. So what I will do, I would literally draw my fib from this high to this low, price retraced a little bit, broke this low here. So I'm going to put my fib on this low there. Why? Because this is not a, for me, it's not a significant retracement. So I move my fib to the next low, and as you can see, price literally came retraced to the 50% and our OTE level. So in this strategy, you need to be cautious. It is a scalping strategy as well. So don't go in with big lot sizes, because if the trend is going against you, you are going to blow your account. So what I would do, I would literally put a small lot size on the 50%. I will put a small lot size on the 61, and I would put a small lot size on the 78. So that would be entry 1, entry 2, entry 3. As you can see, we got tapped into entry 1, tapped into entry 2, and we missed entry 3. And where will our target be? We would literally target, let's say our first entry is on the 50%. I would put my stop loss just above the 1, and I would target the 0. So it's a nice scalp trade. It will be a 1-to-1 risk to reward trade. And there you got in 2 entries. So nice 2R trade. So let's see what happens now. Price enter, we entered on our price. This was the low that was created, that created this high. We broke this low again. Let's see what happens. Where was the last high that broke this low? It was this one here. So we are going to draw our fib from this high to this low. Price retraced. Entered at our 50% with a small lot size. Entered our trade right there. Stop loss above the 1. And then again, our TP is going to be the 0. Nice 1-to-1 scalping trade, winning trade. So far we got 3 winning trades. Okay, let's see what happened here. We broke this low. Where was the last high that did this big impulse move? There it is. So we're going to draw our fib. Price is breaking, price is breaking. Now we're going to start waiting for a retracement to draw our fib. Price started to retrace. Fib is drawn. So what happened here? We entered our first trade right at a 50%. Price went up, tapped us in on the 61. There's our second trade at the 61. And then our last trade at the 78. And it's a 1-to-1. So as you can see what happened here, let's just make it a little bit more cleaner. Our very first trade got tagged in, went a little bit for drawdown, got tagged in, a little bit for drawdown, never took out our stop. Price came, hit our 1-to-1, and we have a winning trade. For example, this trade, you went into a lot of drawdown. So if you are going to play with big lots, your account would not be in good healthy condition. That's why with this strategy, use small lot sizes and scope until your account can grow. All right, so this low was created. Did we take out this low here? No, we didn't. It created an equal low. So where was the high that was created? It was this one here. Price took out this high. So we're waiting for the second high to be taken out to confirm our trend. We have a nice retracement. Where's the next high? It's here. Here we broke that high, and now we can continue the trend. Where was the low that broke this high? It was this low here. So we're going to draw our fib from this low to this high. Enter on the 50%. Didn't trigger our other entries. Below, stop loss below the 1. And we target the 0. Nice 1-to-1 risk reward trade. In, out. Winning trade. The next one, this high got broken there. Now we draw our fib from this low to this high. We got tagged in at the 50, 61, and 78. And we have a 1-to-1 risk to reward trade, nice scalping trade, winning trade. Then we have this high that's been broken from this low to this high. Got tagged in at the 50 and the 61. Let's enter at the 50. Stops below the 1. Targets at the 0. 1-to-1 risk to reward trade, winner trade. This high got broken. Just zoom in so you can see a little bit better. From this low to this high. Did price come and retrace? No, so it's a no trade. We broke this high. Where's the low that broke it? This low to that high. Did price come and retrace? No. Now look what's happening here. Here you can see already from these trades, it will be a little bit more aggressive. The reason why is because these trades, there's no like a huge impulse, significant move like these ones here. You can see like these are nice impulse moves. here it gets a little bit choppy. So personally, you can trade this, just watch for your risk management, but advisable not to trade in these types of conditions. Now, here's a nice move down. This was the low that's been broken. Low 1, low 2. We put out fib from this high to this low. We got tagged in at the 50%. And we got stopped out, losing trade. So now you can see price is ranging a little bit. So we've got this one. So this was the new low that was created. And this is the last high that was created. So we're ranging in this level. Here, liquidity got swept at this high. So let's quickly have a look. Got swept. It's a little bit choppy price. This is actually the more significant low to be taken out. Got taken out here by this one here. This low was taken out. So what I'm currently waiting for is price from this high to this low, and an entry point can be at this level here, the 50, 61, and the 78. So this is a nice mechanical strategy where you can look for your entries. As you can see, there's a lot of opportunities here. There's an order block between our 50 and a 61. There's a fair value gap between our 61 and 78. There's a nice order block above the 78. So if I would enter here, literally would put my stop there. Now you see, for a trade like this, the reason why it's also more riskier, look at this big impulse move. Look, look how big your stops are. Literally, look how big your stops are. So if you are willing to enter on a trade like this, you can, but it will be your own risk management. Make sure you do the correct risk management because the stops are big. So personally, I would rather move it either to the 61 or the 78. If you're really conservative, I would enter, if it's a big impulse move like this, I will enter at the 78. Reason why, my stops is smaller and my risk is better. If you don't get tagged in, forget about it. Move on to the next trade. And this is how you can literally enter on a mechanical way. Yes, like I said, losing trades and winning trades, but this is a mechanical way for you to look at the market and to enter. All right. If you have any questions, drop them down in the comment section below. Go like and subscribe. Hope you like this video, and then I'll see you in the next one. Cheers.